evening. This is the India Development Debate right here on ET Now. I'm Supriya Shrinate. We will be putting the spotlight on the global trade wars and where do we stand amidst rising trade tensions. But also coming up a little later on this wheel of the India Development Debate, we get you an exclusive conversation with Ratin Roy, member of the Prime Minister's Economic Advisory Council and Director NIPFP. That's coming up in a short while from now. He's going to talk on tariff, trade wars and of course rupee. Now, the trade tension between US and China is attaining higher and higher proportions. Firing a fresh salvo on Beijing, the Trump administration on Monday announced import tariffs on Chinese goods worth $200 billion, mainly IT products. Beijing has retaliated, imposing import duties worth $60 billion on a range of American products. So far, India remains insulated as we understand that White House is likely to spare exports from the country in this round of tariff hikes. Experts, however, warn that if the trade war does escalate, it will deal a body blow to the country's external finances. The rupee, which is ruling at historic lows, could come under fresh attack, while the widening trade deficit will expand the current account deficit as well. The market reflected the weak investor sentiment as the Sensex shed almost 300 points and as the rupee plunged to a fresh lifetime low of 72.97, and that's the level it closed the day at. The escalation in the global trade war and what it means to the economy is a big topic of discussion and debate right here on the India Development Debate this evening. Joining us is a special panel, Dr. Jaimini Bhagwati, former ambassador and RBI Chair, Professor Ikriar, Professor Abhijit Das, Center of WTO Studies, IIFT, Professor Rupa Chanda, RBI Chair, Professor in Economics from the Indian Institute of Management, Bangalore, and of course Mr. Sudhir Dhingra, MD Orient Craft. Thanks each one of you for being with us. And Professor, Mr. Bhagwati, if I may start with you. US President Trump has escalated the trade war with China after he imposed a 10% tariff rise on about $200 billion worth of imports. China, of course, has retaliated with what it calls, quote-unquote, forced action on imports worth $60 billion. Has the trade war, the trade skirmish, the trade tension really moved now beyond the rhetoric? This is phase 2 of what we are seeing.
I think one needs to take a step back and look at some overall numbers first before we get down to the specifics. What's global GDP? About 80 trillion. Global trade in goods is about 16 trillion. And trade in services is about 4 trillion, of which financial services, out of that 4 trillion, is about 2.6 trillion. And IT services, in which obviously India is very interested, is about 500 billion. Now, when you say the escalating tensions between the US and China on trade issues, one has to remember that trade is only one part of it. As far as the US is concerned, in my understanding, it is driven to some extent by political reasons. These are political reasons for President Trump to appear to be doing something which would be music to the ears of his supporters. But now, in terms of the overall trade issues, as far as India is concerned, one has to also look at the strategic dimension of this, which is that the US is uncomfortable with China's rise. So when we are looking at what is our interest in this matter, is that what US will do not just vis-a-vis China, but also, for instance, vis-a-vis Iran. We import a substantial fraction of our oil comes from Iran. So we need to look at both the strategic aspects of the trade tensions, which in the case of US-Iran is more driven not by the rise of Iran as an economic power, but in China's case, there is both economic and strategic. Right. And India needs to play it very carefully.
Okay, just hold that thought now. And Professor Chanda, I'll come to you. Professor Rupa Chanda, Mr. Trump has warned, and in fact he had warned, that if China did take retaliatory action against US farmers or industries, America will pursue phase 3 tariff barriers, which would impact approximately $267 billion of additional imports. Where does this end eventually? I mean, is this going to be a one-upmanship that will keep going on and on?
This is a very interesting sort of time, because both negotiations seem to be going on and off, and then you have these sorts of retaliatory tit for tat measures being enacted. So the difficulty here is that we don't know what the outcome of any discussions would be. The US has a spate of issues against China. It is not just the trade imbalance, but it is about intellectual property, it is about industrial policies and incentives, it's about currency undervaluation, etc. So, I mean, this is not just a trade war, it's actually a wide range of issues that the US is bringing. And at the end of the day, what this deal would be, what the Chinese need to offer, which the US would be willing to accept, is really not clear. That, I think, is the main problem, which is why negotiations don't seem to be fructifying, and whatever the Chinese have offered in terms of additional agricultural or energy imports, etc., doesn't seem to be enough for the United States. They've offered something on investments, they've offered something on services, but clearly the US wants to push harder. There is a strong political angle to this as well, because the midterm elections are coming on, and I don't think the US is going to back off very soon. The Chinese, again, to the extent that any concessions will come at the cost of their made in China sort of agenda, again, it would be difficult for them. So this seems like something that's going to be prolonged for a little bit, and the world will face the repercussions of it. I do think that this can be classified as a global trade war, to the extent that it involves the two largest economies, it involves a substantial amount of trade between the two, and because more and more countries are integrated with these economies through global supply chains and value chains. So the repercussions, the ramifications can be quite large.
Fair point indeed. But Professor Das, if we come to you, and I think the important point really is that, Professor Abhijit Das, the important point really is this, like, my two panelists say this is serious. Professor Rupa Chanda says there is even more to this. But are these also hard-hitting business tactics ahead of negotiations to get the concessions, in place from the United States? Or do you realistically believe this can force China to make changes to its trade technology, transfer, and of course to subsidy policies?
There are a number of dimensions to what is happening in the trade war. Some of it has been covered by the two panelists. In my perspective, what we need to bear in mind is not only what President Trump has been doing through these tariffs, but also what US has been doing at the WTO. If you take both the developments together, then what is becoming entirely clear is that, number one, US wants to dictate terms to China at the negotiating table. Whether it will succeed or not is a different matter. And number two, US wants to give a very clear signal to other countries, including India, that if they want to have continued access to the US market in both goods and services, then they have to trade not according to the terms dictated by the WTO, but in accordance to the wishes of the United States. And that is a very clear message which President Trump is trying to give to China and other developing countries. In other words, push countries to the negotiating table to strike bilateral deals, and we can, for the time being, forget about WTO, the rules of which US has been repeatedly violating. And that really is my concern. It goes beyond trade figures. It really represents a situation when US is refusing to abide by the WTO norms, and it wants to create bilateral norms which eventually, a few years down the line, it might get it amalgamated at the WTO.
Fair point. Professor Das, I want to touch upon that in just a bit, but I'll go across to Mr. Dhingra, who represents Indian industry and in some sense has a skin in the game as far as this entire trade scenario play out is concerned. Mr. Dhingra, how far are the chances of this tension spilling outside of China and US? I mean, how serious are the ramifications going to be for the global economy at large? And where is India going to be caught amidst all of this? How worried are you as an exporter?
See, to my point, I think it's very sad what's happening because it's disrupting the world trading patterns and opportunities and supply chain and everything. But without being selfish, I'm thinking about India. And to my mind, this is a tremendous opportunity for Indian manufacturers and exporters to be able to rise up to the occasion where several companies in the United States have been thinking and actually trying very hard to move out of China and go to other countries to be able to source the product that they need. And it is such a huge opportunity, being selfish, but at the same time I think we need to recognize in terms of what opportunity we have. We today can offer them goods and services both. And if we take this opportunity, this will be our opportunity forever. If we don't take it, we will lose the opportunity. Hopefully, things will settle down in a few months or something will happen. But there is a great deal of anxiety on the part of American businesses. I would share with you, only in the last 3 hours, I've had several calls from my key customers. Our largest customer base is America, and they are asking for extra capacities in the coming months to be able to fulfill their orders. And we are seriously thinking about it. So this is an opportunity all of us need to think as Indians to say, could this be a breaking point where we can actually grow our businesses and help make in India as a target that we all have.
Okay, let me just take this across to Mr. Bhagwati. Mr. Bhagwati, is there a silver line amidst this all? Can this be our moment? Can we rise to the occasion and occupy a space that could perhaps partially be vacated because of China? Or the contra question is, India's trade surplus with the US reached a record level of $23 billion by 2017 end, if my figures are right. Is there a chance that actually President Trump is going to go after India next? I mean, still very, very small as compared to China, but even then.
No, I think, yeah, we'll come to the issue of
Mr. Dhingra, I'll come back to you. Mr. Dhingra, give me a minute. This
but
question
the point
is for,
was made
this
that
question
perhaps
is for Mr. Bhagwati. Go ahead, sir.
Yeah, in terms of a silver lining and so on, a rising tide raises all boats, and a tide, or when it's ebbing, brings down all boats. So while there might be an odd opportunity for us, let me explain. For instance, with regard to Iran, if Iran finds it difficult to sell oil, it might at some level reduce the price of oil for India, because India has to get a special waiver from the US to buy oil from Iran. But see, the trade is not an isolated part of any economy. Trade is related to foreign direct investment, trade is related to foreign portfolio investment. You referred to the linkages to the exchange rate and why global trade wars might have an impact on the Indian rupee, why global trade tensions and these difficulties caused by US unilateral action. I think one of the panelists mentioned the fact that the normal place where you go to when you have a difficulty with regard to any country, is it dumping or whatever it is go to WTO. The US has decided to resort to bilateral pressure, and I really don't see too many opportunities here, because if trade volumes go down, hopefully they won't, overall trade volumes, that is global trade growth, it will impact global economic growth. To that extent, Indian economic growth will be affected. But let's look more specifically with regard to India. Our exports are down to levels which are not seen in about 15 years. That is nothing to do with the immediate kind of tensions that the US has provoked. It has something to do with our exchange rate. It has something to do with a lack of competitiveness. I think for quite some time we have in many ways neglected the export sector, and while there is a certain inelasticity to the volume of imports, particularly consumer goods, and you must have noticed that import tariffs were raised in February, and they have again been raised more recently for furniture, for electronic goods, for cars.
I'm just coming to that. Yes. Yes, just give me a minute. Professor.
So we need to be doing...
Okay, okay.
Sure, sure.
Professor Bhagwati, Dr. Bhagwati, just give me a minute, because on your point about trade surplus, the question also is, Professor Rupachand, I want you to take this question head on. You know, we run a trade deficit with China to the tune of $40 to $50 billion annually. How cautious should we be of China, or do you believe there is a possibility that China is going to turn to us, given our huge domestic market, export more here, given punitive actions are being taken against China in the US? Can we use this to our strategic advantage? You said in the US-China trade war, there was politics at play. Can we use that strategic political advantage by leveraging trade here with China? Is that at all on the horizon, according to you?
See, I would actually echo what Professor Bhagwati has just said. Let me just address the question, is this something that provides us with an opportunity on the trade side? Well, we might get into the gap that China is not able to access the US market, but I don't think we have the competitiveness or the supply side sort of capacity to really address the US market. So I don't see any silver lining really. I think the fallout in terms of what would happen to financial markets, to exchange rates, to growth prospects, and our current account deficit, etc., are far greater than any of the sort of positives that may be coming out of this, as was indicated by the industry person. In terms of strategically using this, well, actually there could be a negative fallout of this, because if there is choked market in the United States, there could be a glut in the international market, and that could be dumped in large consumer markets like ours, and that would have adverse effects on some of our manufacturers, for instance, in the steel industry. So, all of these issues have two sides. I don't think it's so clear-cut whether we can leverage because we are a large market. Frankly speaking, unless we are ourselves much more competitive, we won't have that sort of leveraging power.
Okay, that's a fair point indeed, but Mr. Dhingra, I want you to answer that question, because you are somebody who exports to the US, and one of your largest markets is the United States. You were speaking about buyers getting in touch and asking you to augment capacities. But are our exports so competitive? Can we, US and China have a huge trade deficit. We obviously can't fill in all of China's shoes, but are our exports competitive enough to even think about taking not China's place perhaps in the global economy, especially with the US, but some part of that trade?
See, my point is that we can't have it all. That's for clear. There are many other countries can do many things, but you see, we're not talking about any one commodity. We're talking about thousands of products that have been affected. There are many products where India is very competitive. Not to say generally, I wouldn't just talk about exports in general. Let me talk about the garmenting sector that I represent. We've been fighting the Chinese competition for the last 30, 40 years and winning many times and not losing few times. And that is because of certain inefficiencies that everybody knows and everybody is working towards. But having an opportunity where suddenly X amount of additional tariffs have been put on, that gives us an opportunity to at least for the American importers to look at India to say, here is a country that can actually deliver, that actually has the bandwidth, and we can come up to it. Can we take all of it? The answer is no. Can we take a part of it? The answer is absolutely yes. The time is now. And thankfully, I think the dollar is helping us tremendously. This is the right moment to move forward, take advantage of the strong dollar, and go out and really make your place. I think we can make it.
That's a confident man from Indian industry talking, who does a lot of business with America, and I like that. And I think for the government sector, perhaps it could be true that you can take some part of the business that China does. I wonder if it's going to be true for other industries. But Professor Das, in the middle of this trade war, India is also making noises about import tariffs, about those trade barriers going up. Amidst this all, what is the signal we are sending? Is that mixed on our foreign trade policy? Do we risk being seen as not just opportunistic, but even perhaps protectionist at this stage? Or is this the new reality of doing global trade? Everybody looks inwards, does their own thing, you know, global trade be damned?
We need to distinguish between the tariffs which United States has imposed and the recent tariff hikes in India. The basic difference is that the tariff hikes imposed by India are well within its WTO commitments. On the other hand, the increases in tariffs, be it on steel, be it on aluminium, or the recent imposition of tariffs against imports from China, none of these tariffs can be legitimately justified under the existing WTO rules. So that is where the concern lies. While India's tariffs comply with the WTO requirements, the US tariffs do not. So it really is not a question of whether country A is protectionist or not, but the real question is, are countries complying with trade rules or not? And using that as the barometer, I would say India is complying, US is not.
Okay, so as far as the WTO is concerned, India is complying, US is not. I think most people will say that, you know, are we sending out mixed signals? But Professor Bhagwati, given how our CAD is right now, and it seems more of a structural problem than just an outflow inflow problem, and also the argument that some people like Ratan Roy make, which is that India's growth and consumption story are both import dependent. Isn't it then the right thing to do to curb imports right now? Because boosting exports is perhaps the right way to go forward, but it's a more long-term bet. You're sitting on a current account deficit that could widen to 2.8% of the GDP for this financial year alone. I know, you know, you may not be a big fan of these import barriers going up, but is this then the right thing to do, at least given the present circumstances?
Absolutely wrong thing to do, because imports are part, they feed into exports. You know, what kind of imports are we talking about? This is very wide sort of word in a way. I would actually think, since you're now getting into what we should do, there are some short-term measures, medium-term measures, long-term measures. Let's look at short-term measures. For the last 4 years, the rupee has had appreciated from 60, nominal terms, 68 rupees to a dollar to 64 rupees. It should have gone down 20 paise every month. So that would have been 2.4 rupees per year. So in 4 years, it would have been down by about 9 rupees. So it would have been about 77 rupees. You want an orderly depreciation of the rupee, not a disorderly depreciation of the rupee, which is what creates panic. And as you said, right at the beginning, it had reached historic lows of 72.9 and so on. But the fact is that the rupee is overvalued. So that is something you could have done starting in 2014 or even earlier. But having said that, now what are the medium-term measures that we can do? Definitely not raise your import duties. You need to look at doing deals, both the private sector aided by the government, to become part of value chains. We are not part of value chains. I'm not even getting into labor market reforms or land acquisition reforms, because those I will put in the medium to long term. And the really long term is training. Our workers don't have the skills. Our workers might be low cost, but they are not productive enough. So that's really long term. But short term, I would say, look at the exchange rate very carefully. Don't panic. Don't fritter away your foreign exchange reserves in defending the rupee. Look to interposing, if any silver lining exists, if any, because of the political issues between China and the US. The US would like, I mean, I don't know whether you follow this, but the US has been trying to woo India on the strategic front for the obvious reason, because it wants to contain China.
Yes.
We can't be part of that game. We have too long a border with China. So the medium-term strategy has to be, how do we become part of international value chains? And then we need to be specific, sector specific, and within each sector, where, within, pardon me, within each sector, what are our...
You know,
Professor, you got it.
Professor Bhagwati, you make an important point that we can't be short-sighted. You make an important point that we can't be short-sighted about this. This has to be a more medium and long-term approach. Resorting to import tariffs may perhaps not be the right thing to do. Your point well noted, but Professor Rupa Chandra, if I may come to you, the finance minister had categorically stated 3 days back that the US-China trade war was one of the biggest global factors for a weak, volatile rupee. This is a fresh blow, the new trade skirmish, the new trade tension that we are seeing, and this is going to further strengthen the dollar, if anything. What will then this mean for our own currency, which, like I said earlier, closed at an all-time life low of 72.97 today?
Well, I mean, we recognize that, these sorts of trade tensions, as well as what has happened with oil prices and so on, have had an effect on the Indian rupee. But the Indian rupee was overvalued, so this is partly a correction, and I agree with Professor Bhagwati that we should not spend too much of our foreign exchange reserves trying to defend the rupee, because that will only send the wrong signals. The long-term issues are really structural, and we have to address export competitiveness. Let me also just address one issue, which is that whether putting import tariffs is the right thing or not. It's absolutely not the right thing to do, exactly for the reasons mentioned, because they feed into exports, and there is a body of evidence, especially on Indian firms, which says clearly that the impact on productivity of firms coming through imports due to better quality, variety, lower costs, etc., and the technology embodied in imports is very important for Indian industry. So we don't seem to understand the role that imports can actually play in terms of productivity enhancement. So recognizing that with the Make in India sort of initiative, etc., it would absolutely not be the right thing to be raising import tariffs.
Okay. Let me just ask that question to the man who, like I had previously said, has skin in the game. And Mr. Dhingra, do you agree with this? Import barriers or non-essential import barriers eventually eat into the export potential of a country. I mean, many people believe that these barriers going up, or us putting restrictions on non-essential imports, is a very communist sort of a way. It's a very big brother attitude. What is non-essential? Should I be sending my children for foreign education? Should I be eating imported foods? This is a very communist way of living, and we've perhaps moved on from that, haven't we? And on the larger question, do imports eventually eat into exports? I just request you to be brief, because I've got very little time on this show. Mr. Dhingra.
Okay. I think it's not the right thing to do, because I think since 1991 we've moved many steps, and our economy has grown because we opened up imports, we opened up the economy to global competition, and our companies learned to compete with the rest of the world. And today, if we, for a short-term measure, try to block imports, I don't think it's a good thing to do, because market forces must play its own role. We cannot and should not be defending it short-term to save maybe a few $1 billion if it is. But once you spoil the market, it's very hard to fix it.
That's a very important word coming in from somebody who exports big time to US and other markets, that you can't resort to short-term measures because it is going to be difficult to come back to normal and fix it. But a quick last word to you, Professor Das there. Ultimately, there is no winner in a trade war, is what we have established. But how is this entire US versus China tension and, us caught in between going to really play out in the WTO?
Oh, it's absolutely beyond US and China. It's already affecting many other countries. Countries are knocking at the doors of the United States to be continued to access its markets, and they are willing to make any compromises. I will not name countries, but there are countries which have agreed to voluntarily limit their exports to US of steel and aluminium so that they do not face these tariffs. And these totally violate WTO rules. The short point over here is that countries are adopting a very short-term approach. They do not want their exports to the US to be reduced, and they are willing to make compromises with their WTO rights. They might benefit a bit in the short term, but in the long term it will come back to bite. And the specific example which all of us must bear in our minds is what happened to the textiles and clothing sector from 1960 onwards. As a short-term measure, countries agreed to voluntarily limit their exports of textiles and clothing to US and subsequently to the EEC. And thereafter we had this entire network or the rigmarole of textile quotas. I am afraid if countries do not take the right approach on the US at this juncture, we will be grappling with similar problems a few years down the line.
And we don't want those problems to erupt. But Professor Bhagwati, Professor Chanda, Professor Das, and of course Mr. Dhingra, thank you very, very much for being with us on this edition of the India Development Debate. Remember, there is a current account deficit that's blooming. At this point in time, the government wants to curb non-essential imports. But is that the best way to go about it? You've got an expert view from economists and perhaps one of the biggest exporters from India to the United States saying, no, it is going to be difficult to revert to normal. However, the government has been caught between this global trade war that's brewing between between the US and China. We can't just stay mute spectators to this, and we can't be resting on our laurels. At this stage, global trade tensions will not just strengthen the dollar, it will continue to weaken the Indian currency, and we've got to be very, very watchful. Thank you very much for being with us in this edition of the India Development Debate. We take a quick breather and we come back with a special conversation with Professor Ratin Roy, member of the Prime Minister's Economic Advisory Council, Director NIPFP. He takes tough questions on the macros, the rupee, and also the trade skirmishes.